we are just going to have them in the archives. Just let me know if you want the replay. All right. So let's get into it. So Tesla, ticker symbol TSLA on any major index. It's part of the S&P 500, the Nasdaq 100, a lot of major indexes that are available in the US, right? So this is a company that is globally recognized. You guys have all heard about it, but let's kind of look into it a little bit more and kind of get a deeper understanding of how their leadership is going to drive the direction of Tesla, and kind of see if the innovation in the kind of the nuances surrounding the company matches the hype that surrounds it right now. We just so happened to have a good volatile day with Tesla. Yesterday it was up $60. Today it's down $30. So it gives you an idea of how the company and the stock price is moving right now. So let's get into it. First, a disclaimer. This may sound like financial advice. This may sound like I'm telling you what to do, but this is just all for educational purposes only. I am not a financial advisor or fiduciary. Everything I say is to just give you a deeper understanding of how I look at Tesla. This is not in any shape or form me telling you to go and buy Tesla. I do not have a position in Tesla currently. So full disclosure, I'm speaking from a position where I do not have ownership in the company. I have in the past, but I currently do not now. So a little bit about me, for those who don't know me very well. Like I said, I'm not a financial advisor. I am not in any way someone who has taken any formal education in finances, but I am someone who understands how important it is to understand your own financial wellness and how that kind of coincides with your generational wealth building journey. So I started investing in the stock market in 2013 through a 401k very passively. That was 8 years ago. I am much more in tune with my investing strategy and who I am as an investor, but that took a lot of time. During that time, I got my degree in a different area of expertise. I've started my own businesses. I've explored other ways of kind of working for the dollar. And I've found that investing has allowed me to be the happiest, but also gain back more of my time and freedom. And ultimately, I do this because I'm passionate about building communities and restoring kind of that trickle down effect that we've all been waiting for when it comes to wealth. So this quote here is kind of the basis for why investing is important. So we're going to talk a little bit, tiny bit about why investing in general is important and how that coincides with investing in a company like Tesla, a company like Tesla where a small amount of money could turn into something that is much, 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 much larger, right? So the quote is, "Does thou have the soul of a slave or a soul of a free man?" And this is from a book that that I recommend anybody who's looking for a little bit more guidance in personal finance to read, The Richest Man in Babylon. Basically saying, are you someone who is going to consistently consume, spend your money, work until you die in exchange for a worthless piece of paper that is continuously losing value each and every day? Or are you someone who lives without debt? Are you someone who makes more than they spend? Are you someone who lives below their means? Are you someone who creates wealth for yourself and then ultimately for others? Are you someone who is free of that working mentality of, man, I have to get up and grind, and I don't have the time to do things for myself? And that's why investing is so important. And the earlier you do it, the more free time and the more of your life you get to live, essentially. So before we, again, dive into Tesla, we really do have to understand what it is we're investing in. When it comes to any type of company, any type of stock, any type of, in the grand scheme of things, any type of investment, we do have to look at it from a bird's eye view and really understand what it is we're getting into. So here are 3 questions you need to ask yourself before investing in any stock. And this is just not just Tesla, this is any type of investment. First, is this company within my circle of competence? Is this a company that I understand how they make money, how they make their profit, how they acquire new customers? What is their plan for growth? Are those questions that I can answer easily? Are those questions that I can explain confidently to a 10-year-old? If that's not something that I can do, that may not be a company I want to explore, or it's a company I need to do a little bit more research on. Does this company fit my risk investment, my risk profile, or my investment profile? So when it comes to investing, all investments have some type of risk, but not everybody needs to take the same level of risk, and not everybody's able to take the same level of risk, right? So does this company match my profile? If I'm someone who doesn't like to take a lot of risk in life, Tesla, the way it moves, may not be a company that matches my profile. I may love what it does. I may love what it does for the earth, what it does for people, but the stock may be a little too volatile for my goals, my investment goals, right? So we can talk about that a little later. And then finally, have I done the research necessary to make informed decisions about the stock and or the direction of the company? So in days like today, in days like yesterday, where the stock is very high and or very low, have I done the research necessary to be confident in my thesis that I originally had going into the investment, whether I was bullish on it or I was bearish on it? Are these moves something that I've done enough research on to be able to stomach kind of the loss of money or the gain of money on a day-to-day basis? So we have to do a lot of research in order to be confident in our investments. So these are these are 3 main questions we want to ask ourselves before getting into any type of investment. So let's get into who Tesla is. Keeping in mind how we want to invest as individual investors, as retail investors, we do want to understand companies at their core and kind of understand the layer within the layer. It's almost like those Russian dolls where you take off the cover, but there's another layer, there's another Russian doll, and you keep opening it up. And the more you look, the more layers are open, and the more you can see what the company actually can do for you and the world. So that's how we need to look at Tesla. Depending on how you value the company is going to really distinguish how you value the stock, right? Question, type in the chat. I want to see some answers here. Type in the chat just what type of company you think Tesla is, just really quickly. Like what do you think Tesla is in terms of like a category? So we got cars. There's no such thing as a wrong answer here. Technology, batteries, technology and transport. Cool, all good answers, all right answers. Good for the planet, energy, perfect. All right, so those are all great answers, and those are all part of a piece of the puzzle in terms of what Tesla actually is. So Tesla started out as a pure automotive company, and it started within the name, right? They went public June 29th, 2010. And at the time, their share price was $17, all right? Looking back then, they were called Tesla Motors, right? When they first were started, Tesla Motors was purely an automotive play, right? $17 per share. Its current price today, it ended at $732, right? I left it blank here because, again, that company was bouncing all the way up until the end of market today. So the current price now is $732. It's gone up a few dollars after market, but it's around that price, all right? On the surface, Tesla designs and sells electric vehicles, and up until now, their profits mainly came from those vehicle sales, but also selling zero emission vehicle credits to other manufacturers and other companies. So we'll get into that a little bit later in terms of like their profit, but that's very important to understand that Tesla doesn't just make cars, right? It's already starting to bleed into other profit and income streams just off of the fact that they have electric vehicles in their pipeline. Market cap, and when Tesla is being talked about in the electric vehicle space, it's being talked about as a pioneer, as a company that had first mover advantage, that is ultimately going to be the company that is looked to when you compare it to other companies coming into the space, right? So when you look at its market cap, which is its total shares, its total outstanding shares times its current share price, you can see that the market cap is 649 billion. $649 billion in the automotive industry is bigger than its next three competitors combined, right? So right away, you have to start thinking about how Wall Street is valuing Tesla, right? Tesla is in the consumer discretionary sector and in the automobiles industry. We just saw in the chat that we can see Tesla as not just an automotive play, right? We can see it's in technology, it's in energy, it's in sectors that are in big, that have large roots in our lives, right? So technology is everywhere. Energy is everywhere. When it comes to solar power, we just saw the president sign large amounts of monies that are going to go towards infrastructure and solar energy. And Tesla is a big, big play in that industry. So again, it's not just a car, right? In terms of its 52-week price range, Tesla, this speaks to its volatility. All right, it ranged from a low of 111 to about a high of 900 over the past 52 weeks. So that's just from now until 52 weeks prior. Okay, so what we're trying to really try to get an idea of where Tesla's been in the last year and kind of getting a sense of how you are in terms of an investor. Like, can you deal with those large swings? Can you, obviously, if it's going your way and you're making money, sure, you can deal with that. But can you deal with the downside where it goes from an 800 to a 600? You know, those are the types of things you want to pay attention to when you're looking at its range. And in that time, it's outperformed the S&P 500 by just under 400%. Take that for what it is. But just think about your current bank account, your current savings account, and how much you're getting in terms of interest per year. The last 52 weeks, Tesla would have gave you 400%. Bank of America probably gave you 0.01%. So take that for what it is. Competitors within the industry, again, we really got to start thinking a little deeper about who their actual competitors are. Are there competitors for General Motors and Ferrari? Of course. If you're talking about the biggest players in cars, absolutely, right? But when you're talking about then electric vehicle space, then that's when Tesla starts to separate itself, right, from just the competitors in its industry. But when you take into consideration its technology, its energy, its the fact that it's making it more cost effective for people to go solar, to go more energy efficient, is a game changer, right? So when you really talk about competitors, think about it. Is Ford, General Motors, Ferrari really competing with Tesla? Are they really taking market share from Tesla where it really matters? Think about that. So if you had never sold Tesla and you had invested $1,000 into it, you'd have about $42,000 in your bank account right now, right? Obviously, that's a very linear way of thinking about it. Obviously, you would have to have a lot of insight and a lot of foresight to have invested into Tesla and understood where it was going. And no one could have predicted the kind of run that Tesla has been on in the last 10 years, especially considering the tumultuous start it had. So when you're really talking about the growth of the company, $1,000 to $42,000 right now is one probably a miracle, but also two, it gives you a glimpse of that the company is kind of just scratching the surface of what it actually can do for your investment, right? But also for the greater betterment of the general public. So let's dive into how they are kind of pushing that method forward. So some key dates here. Again, I mentioned in the beginning that in order to really understand Tesla, you really have to kind of dive into their past and how they were started and how they've been run to get an idea of how they're going to keep being run and how that coincides with the big lofty, almost astronomical, laughable goals that they have, right? Elon, right? We talk about Elon a lot, but before Elon, there was Martin Eberhard and Mark Tarpenning. Okay, nobody talks about these dudes anymore. Unfortunately for them, but fortunately for us, and fortunately for Tesla, they started something that was able to starting to get that momentum forward towards something that was different, right? Something that was going to be more sustainable than just guzzling up all the gasoline, the oil, and all the coal from the earth, right? These two engineers had something in their heads that told them we need a shift in terms of the automotive industry. The automotive industry needs a shift, right? So they named a company Tesla Motors. The next year, Elon joins the board of directors by investing 30 million. They tell him, Elon's like, hey, I just came from PayPal. I killed it. I have all this money in the pot. I need to invest in something else, right? I need to do more. And Martin and Mark reach out to Elon and like, hey, invest in us. We need the capital and we'll let you join the board, right? I guarantee you if they had gotten to know Elon a little bit more before they made that offer, they probably wouldn't have done it. But again, things happen for a reason. Lucky for us, not so lucky for them that Elon came aboard. And the next few years is very, very tumultuous, not per se for the company, but for the leadership. And as we all know, your company is only as great and as steady as your leadership. So you might as well say Tesla was having some hard times, lots of lawsuits, lots of accusations, lots of defamation suits. And even within all that, they still managed to produce the first electric car in 2008, right? Called the Roadster. First all electric car, big hoopla. And of course, Elon gets the first one because it's Elon and Elon can't let anybody have anything. He's a big kid. And after they released the Roadster, from what I've gathered, no one likes to call it what it is, but Elon basically stages a coup and takes over as CEO. He because of the way he is, because of the nature of how he carries himself, he is very charismatic and he draws people to him. And people saw that, okay, we made such a huge leap when it came to the automotive industry, because again, prior to the Roadster, it was very expensive and very hard for companies to make all electric vehicles because of production costs. So what Tesla did was groundbreaking, right? Leadership, board of directors decided, hey, we need someone who's going to be just as almost groundbreaking as what we just accomplished. Elon makes his way in. Next year, $500 million bailout. So during all of this, Tesla has been struggling to raise money and keep profit because they're in an industry where your profit margins are very, very low. Think about it. Companies like Toyota, Volvo, even the GMs, the Fords, they've been around for decades, and they've gotten the production costs to a point where they can make their cars, millions and millions of cars, more cars than Tesla per year, and keep their margins low. So even if those companies couldn't make what Tesla accomplished happen, right? It was because it was so expensive. And as you can see now, they're just now getting to it. You know, GM, Ford, they're now just last few years getting on board with that kind of stuff. So even with all that groundbreaking stuff, they still needed $500 million from Daimler AG, which is important to think about later on. I'll get to that. But also the Department of Energy. So even the government didn't want Tesla to fail, right? The exact numbers on that bailout is actually Daimler only contributed $10 million. The Department of Energy contributed about 455. So the majority of the money came from the Department of Energy. And this is just a quick side note. It just goes to show you that our government is able to really allocate funds to things that it really prioritizes and deems important to the greater good. So just keep that in mind when it comes to Wall Street, Main Street, Wall Street, Main Street. Okay. Tesla didn't see its first quarterly profit until 2013. And that's because, again, over the years, it's very hard to get those margins down. But what they started doing in 2013 was selling those emissions credits to different companies that needed to come up to code, right? One thing to also think about that I'll touch upon later is that during this time, the US government was giving tax breaks to US citizens for having electric vehicles, right? So during this time, of course, people are going to buy Teslas. Of course, people are going to try and get more electric vehicles, more solar panels, more things that are able to really preserve energy and allow the government to pay them for having the product, right? So that's when you really started to see a lot of their sales grow, was when they entered the solar and energy market, again, started to get their roots into other types of industries. So instead of staying stagnant and non-innovative like a Ford or a GM, which is purely a car play, Tesla decided, hey, we already were groundbreaking in EV space. Why not continue to try and make energy, solar, and just saving the world more cost effective so more people will do it, right? Finally, surging popularity from about 2000, the early 2019 to when they started reporting consecutive profits. So remember, between the time they went IPO in 2010 and 2019, they didn't have consistent profitability, right? They had shown that they could be profitable, but 2019, the end of 2019 was the first year that they were profitable for a full year, right? So that's huge, especially when it comes to a stock price, right? Things like that, showing consistent profitability will shoot a stock up. Institutions will buy stock in a company that they know shows consistent profitability and growth. During that time, they unveiled the Cybertruck, which back in 2019, they said that they had 250,000 pre-orders for. I don't know about you guys, but I haven't seen any Tesla Cybertrucks out on the road lately. I've seen their cars, I've seen their SUVs, their crossovers, but I haven't seen any Cybertrucks. So when we're talking about Tesla, the stock, and we're talking about how high the price is, could it be conceivable that a lot of the price that is built into the stock is because of this anticipation? Now, this could be a question that gets a little bit more expounded the more time that goes on and the more time that passes before the Cybertruck comes out. You know, to end of 2019 to about mid 2020, the stock runs up to over $2,000. Obviously, they announced that they would split a couple months up to before August, and there's an additional run up. But before they announced that they were split, it was at like $1,500, and then it later split. It ran up another $800, $700, $800, and later split at $2,200. Right. So if Tesla had never split, right, about $3,800, $3,800, give or take, right? When we're talking about stock splitting, right, how we want to understand the split, it is that the value of the company does not change, right? What the company is essentially trying to do is make the company more affordable and more accessible to a retail investor. So our institutional investors are much different from our retail investors. Our retail investors are you and I, right? Our money is not going to move the market like a bank, like a JP Morgan Chase, a Goldman Sachs, even a hedge fund like State Street Select. Those type of companies with millions and millions and millions and billions and billions of dollars can move the market. We cannot do that. So in order for companies like Tesla and more recently Apple and other companies to make themselves more affordable, but also more accessible, but also allow for more money to exchange hands within their company, a stock will split. Okay, so Tesla did that. They did a 5-for-1, August 20th, 2020, and you guys know since then it's done its thing, right? It's had that run up to about $900 after it had been announced that it was going to be entered into the S&P 500, right? That was huge because it entered into the S&P, which is a weighted index, and because it's weighted, multiple companies had to be kicked out of that index to make room for Tesla. So now we see whenever the Tesla moves, the market itself moves. The S&P moves because of how much weight Tesla has. Well, we can get into that another day, but just to give you a gravity of how much people want Tesla, these huge institutions have to add Tesla to their funds because it is in the S&P. It's a public company that people want. The number one factor when it comes to evaluating a company, especially when it comes to long-term investing, in my humble opinion, is leadership. I've touched upon that a couple times tonight, but I really want to touch upon it here because your leadership is really going to tell you where your company is going to go, right? You can think about the past when it comes to being an investor, but ideally you want to be in tune with where your company is going, because that is going to, investing in the future is the future of investing. Like there's no way around it. You don't want to keep investing in these old dinosaur companies that aren't innovating. You want to invest in companies that are consistently taking risks and trying to become a better company, not only for you, but for the planet, right? So let's examine Tesla's leadership. First, we have Elon. Elon gets a lot of credit for being the face, but again, he wasn't the founder. Elon came from PayPal with a large chunk of money, bullied his way in, and the rest is history, right? Elon is, I think he's the richest man in the world now. Him and Bezos kind of pass the baton every day, depending on what their stocks do. But he has so much money, that kind of gives you a clue into what Tesla's done for him, but kind of how brilliant his egotistical, intelligent mind is. There seems to be a healthy balance between taking risk and understanding innovation. I also want to point out Andrew Baglino, all right, their senior vice president. What's very interesting about this man is that they brought him over solely for the fact that he studied hydrogen as a transport fuel in the early 2000s. And this is very important because, as I've mentioned, creating efficient, long-lasting energy through battery power, which has been like the lifelong goal of any company, any automobile or energy, or any company in the energy space, has been a long goal for those companies to achieve. The key is hydrogen, right? When we're talking about hydrogen powered batteries, we're talking about batteries that have life cycles of hours and days and months and weeks and almost years, right? Not only can these batteries be used, but they can also be used as a store of energy, right? So another part of Tesla's kind of income stream is their energy storage business, right? So not only can they store energy that they produce, excess energy that they produce and store it in batteries, they can now take other companies who are producing energy for in power, and they need to kind of harness that hydrogen energy for their cars. They can now store it with Tesla because Tesla has all these gigafactories. They have a large infrastructure already in place for hydrogen battery storage. So this goes to show you that this is not just a face, right? This is not just some guy with a title. This guy was brought in strategically because Tesla wants to move forward in developing hydrogen batteries and making that more affordable and cost effective over time, which in turn will make the world a better place, which ideally and probably will make their stock price rise way up, right? Jerome Guillen, president of heavy trucking. I mentioned Daimler AG earlier. They were the one company plus the Department of Energy that bailed out Tesla back in 2008, 2009. Jerome Guillen was there from 2007 to 2010. So this, again, let's dive a little deeper in there. Is it conceivable to think that part of Daimler's incentive for investing in Tesla, a measly 10 million, right, was also, hey, we'll let Jerome go over there and start the heavy trucking business, right? Get started on that. So let's start thinking a little bit deeper into how these kind of backdoor deals, these kind of these things that kind of seem normal, right? Oh, this is just another executive coming into another role. Well, no, if you follow the money, if you follow the timeline, you know, Elon immediately, as soon as he took over as CEO, had his eyes on heavy trucking. The Cybertruck had 250,000 pre-orders in 2019, right? That was a plan that was a decade in the making, right? Again, you have to understand what Tesla's been doing in the past to know what they're going to be up to in the future, all right? And then obviously Zachary Kirkhorn, he's the CFO. Tesla does this weird thing where if you go to, it's so funny. If you go to their site, Elon is called like their Techno King or stuff like that. They have like these weird names, and again, it just lends to like the quirky kind of savviness that they're working with, and that these brilliant minds are kind of going against the status quo, and it's working. It's working. Another thing I look at when it comes to evaluating a company that I feel is important as an investor is my money making money, but also is it making money without doing harm, right? Is my money in companies that are essentially making great business decisions while also keeping their employees, the environment, their clients in mind? Are they taking risks, but are they not sacrificing people for profits, right? If these questions can be answered, that's great. If they can't be answered, the company has a lot of work to do. If a company isn't talking about ESG right now, they are severely behind. But as a retail investor, you want to think about what type of world you want to shape, what type of world you want your money to create. You work very hard for your money, but if you have a moral obligation to anything but yourself, which I hope anybody on this call does, you would want your money to be doing something other than just making your pockets fatter, right? There's a time for that, and there's not a time for that. And companies should be making sound decisions to make sure that they're always making the right decision, right? Because that's where I feel most comfortable with my money, right? Impact investing, money that is doing good. So when we talk about Tesla, where do they stand in that kind of spectrum? So this research is coming from MSCI LLC. So they do a lot of research on the ESG of companies specifically. So they do a lot of focus on these specific areas: environmental, social, governance. So if you're looking to get better at impact investing, hit me up offline. I have a couple books for you that you might love. But we can see Tesla is a leader in environmental ESG, right? They obviously are great at producing clean energy, restoring energy, renewable energy, but also making their carbon footprint as small as possible, right? This also lends its fact to why Tesla's so valuable, why why that first mover advantage was so great is because they have the blueprint. They have the blueprint for carbon reduction. So other companies have to follow their lead. So Tesla's always going to be, well, I don't want to say always. Tesla is in the lead when it comes to that, right? Social, they have to do better. It seems like every other week I'm I'm seeing a news article of autopilot navigation crash, but they all seem to be in California. So that's either California drivers or no, I'm kidding. It's either Tesla really, well, I don't want to say it has anything to do with California, but I will say Tesla has a lot to focus on when it comes to their autopilot navigation, right? Specifically for that, they are the leaders when it comes to that technology, but they have a long way to go to a fully automated experience when it comes to their cars. All right, lots of fatal car crashes and injuries, but also um, what's not mentioned here is that there's been a lot of recalls, right? So we can look at recalls from a different couple of different perspectives. Most of the time, we look at recalls from a negative perspective. It's like, oh, GM or Ford or Cadillac had to recall 25,000 vehicles because their airbags deployed, while the person was driving, like God forbid. But what we can look at to kind of get a little bit of positivity from that is the percentage of recall the company is doing, right? Look at the total amount of the cars that were, when what you want to look for is not that the recall is happening, but how much are they recalling? Are they only recalling 3,000 vehicles? Are they recalling all the vehicles? Are they recalling half the vehicles? Tesla has done a very good job of recalling more than 70% of the vehicles that have been called in question, right? So they're doing it, when they hear about it, they're jumping on it right away, right? So we can kind of look at that as like, wow, they suck because they're not getting autopilot together, but they're doing a good job of reining it in and working on it. And then finally, governance leads to leadership. Governance for me is the most important, right? Because none of these two, the other two don't matter if your leadership does not care about them, right? Your governance has to be intact for social and environmental to matter, right? Governance, they're categorized as average, but for me, I would say they're lagging. Their management team lacks diversity. Especially on their management team that makes the decisions, but also on their board of directors. It They have to do a better job of getting more people of color, women, people of kind of that people, because renewable energy is for everyone, right? So the decisions about renewable energy need to be made by the most representative group of people possible, and Tesla's not doing a great job of doing that. When it comes to their employees, in their hiring practices, in their labor practices, they also have to do better. Lots of violations, lots of lawsuits, all recent too, right? So again, things like this are going to happen when you're a multinational conglomerate, right? You're going to run into these kind of roadblocks. The key is, are you just throwing money at it and just having your lawyers locking it up in court for years? Or are you making substantial strides and trying to get better? And it seems as though Tesla is prioritizing making renewable energy more affordable because they believe that will make a lot of the other issues go away. So that just remains to be seen. So we'll see how they continue to evolve in that aspect. Here's just another glimpse of ESG in action. So let's talk a little bit about, again, their competitors, Ferrari, which is race, GM, and Ford. In their industry, automotive industry, Tesla is obviously going to be the leader, right? Both of these, the other three companies have EV, AV components to them, but the majority of their product is gasoline, oil based, right? Multiple studies, multiple researchers, years of research has shown that that is going to probably not be obsolete, but behind renewable energy, the flip is going to happen more sooner than we think, right? When that flip is going to happen, people can speculate, but in terms of just ESG, they're already so far behind. It's only going to widen the gap as Tesla gets more and more towards a more safer, renewable, cleaner planet, and they continue to lag behind in jumping on board. Let's talk a little bit about the finances of Tesla. These are kind of the metrics that I look at when it comes to kind of making a fundamental decision on a stock. There's other metrics that you can look at, but for me, these are the 6 that I find that are most important, right? Total revenue. Tesla has shown that they can grow their revenue consistently over the last, I want to say 8 quarters, right? So that's probably the beginning of 2019 to now, right? They've shown that they can grow their revenues consistently, and that's predominantly through their vehicles, which is amazing, right? We just talked about how they have other businesses that they're starting and that they're trying to profit from, that is contributing to their profitability, and they're already increasing their revenues just through their vehicles, which shows you that the demand for their vehicle is there, right? Net income. So what is their profit? It's mixed, right? I've talked about how their profitability has been mixed over the last 8 quarters. Sometimes they have a little bit more operating revenue, operating costs, operating revenue or operating costs, depending on their investments for the quarter, their production costs for the quarter. We saw COVID really impact a lot of companies last year. Tesla was was not left out of that. Their production was stopped. So the fact that they have been able at the end of quarter 2020, last quarter 2020, to be able to have a net income of 712 million, which is still profitable, is kind of amazing. It's kind of a miracle, considering that they only sold less than 500,000 vehicles last year. Toyota, GM, Ford consistently sell millions and millions of cars a year, and the Ford F-150 continues to be the most popular car in America, still to this day. So keep all that in mind. Tesla is still profitable. It's pretty good. Earnings per share. So this is the profitability of a company. There's a difference between a company making a little bit of profit and a company making a ton of profit. So we saw last week, Apple is probably the most profitable company in the world. It prints money hand over fist. In terms of size of companies, Tesla is probably the exact opposite of Apple. Pretty inconsistent in terms of beating earnings estimates. And again, their profitability is not coming, if you just look at their industry, is not coming directly from what they're supposed to be best at, right? So in terms of profitability within their sector, within their industry, again, they can improve. They need to improve, or else things can start to get a little bit more choppy for them. We'll see on their next earnings on 4/27 what the story is, and particularly if you are a type of person who is in depth on what companies report, look to their guidance for the rest of the year, what they expect the rest of the year to look like, to really get you in tune with what you could see the stock doing. Price to earnings. So all this is telling you is, how much am I paying to partake in the profits of this company, right? How much of my dollar is going towards me experiencing $1 of profit, right? Depending on how high or how low that number is, will tell you whether a stock is either overvalued or undervalued, or if that company is growing at a great speed and it's worth it, or people are writing it off too soon, right? So in terms of a PE ratio, so price to earnings, right? So what is their current stock price in terms of dividing it by their earnings, right? We can do a different class on that later, but just to get an idea of that, ideally, you want that to be in line with what the industry is giving back. Tesla has a whopping PE ratio of 314, which is way above the industry average of 88.4. But again, look at what Tesla is being valued as. In this snapshot, is being valued as an automotive company, where, of course, in terms of PE ratio, you're going to be paying way more in terms of a premium for Tesla than you would for Ford. It's because they have better growth prospects, right? So this tells you that investors are really willing to pay whatever they need to, a whopping $315 for at least $1 of Tesla profit, right? A profit that is inconsistent at best. Something to think about, right? Debt to equity. This is really, you really want to understand how companies work and how it's not so different from how you should be valuing yourself and how you should be running yourself as a business, right? Think about it. Your best friend comes to you and is like, yo, like, I really want you to invest in me, my company, whatever. I got this next big thing, blah, 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 blah. And you ask him, okay, who else is invested, right? And he tells you all these people are invested, blah, 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 right? You invest. 6 months later, he comes back to you and is like, blah, 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 blah. We need more money, right? You give it to him. Third time's the charm. Now you're asking him, okay, where's this money going? What have you bought? What assets have you accumulated? And he's like, none. He comes back to you a fourth time. Are you going to give him money? Probably not, right? Same thing goes for companies. You don't want to invest in a company that is over leveraged, right? A company that is borrowing more than it's accumulating, right? We want companies to be smart with their money, right? Because we're trusting them with ours, right? We want companies to be making good decisions with their cash flow, good decisions with their equity, so they can continue to distribute those gains back to us, the shareholders, right? So the optimal debt to equity ratio is 2.0 or less, right? We want a company borrowing no more than 2 times than what it owns. Tesla's doing a great job of keeping their debt to equity ratio low. They have about $19 billion in assets, $13 billion in debt, which means their free cash flow is around $6 billion. So when we talk about free cash flow, we'll talk about that in a few minutes, right? I'm very excited about to tell you what Tesla's been doing with their free cash flow and how this is something that really is going to tell you how the company's thinking and why they're growing at the rate that they are. And then currently, Tesla does not pay a dividend, but that's okay because they're a growth company and dividends aren't the end all be all. I personally love dividend companies, but depending on the type of company you're looking at and the type of investor you're trying to be, dividends may not be as important to you. Dividends are just, they're not mandatory, right? A company doesn't have to pay out to the investor, but companies don't pay dividends for a multitude of reasons. But the biggest reason is they're just reinvesting either in their growth or trying to pay down their debt. So let's talk about the bulls versus the bears, the buyers versus the sellers, right? The market is either going up, it's going down. It may move sideways here and there, but it's always moving up or down within that sideways movement, right? You're either a buyer, a seller, right? A bull or a bear. You just don't want to be a pig, right? And let's type in chat who we think the pigs are in this scenario. No wrong answers. I need at least one answer. The scared people. That's a good question. Thank you. People who aren't investing at all. The get rich quick. Great answer. Great answers. So those are, again, no wrong answer here. That's the beauty of the market. But the pigs are mainly the people who don't have a plan, right? All those answers are correct. You can get rich quick, right? It's not something that is advisable, but if you have a plan and you know what you're doing, the market is a place where you can make quick money. Obviously, if you're trying to build wealth, something that is long lasting, you need time and patience. But whether you want the market to go up, you want it to go down, whether you're buying or you're selling, just have a plan so you don't get slaughtered. So let's talk about the bull case for Tesla. I'm an optimist, so I like to start with the positive first. And these are 3 reasons to consider buying and or holding the stock. All right. Again, this may sound like financial advice. This may look like financial advice, but I promise you it is not. All right. Do your own research, do your own investigation into the stock so you can make better decisions about your own money. right? Nobody cares more about your money than you. So keep that in mind when you're thinking about whether or not you want to invest in any company, right? So here's 3 reasons to consider. Obviously, these are not in total, but here are my 3 main reasons. First, Tesla is the future of transport. When it comes to renewable energy, when it comes to making transport easier and more affordable and more clean for the planet, because we're already overpopulated, we're already over consuming, right? We have to start somewhere, and it starts with how we transport ourselves, right? Transport, when we think about it, is another form of communication. It's a way for us to get to where we need to be so we can do the things that we need to do. If we can make that easier for people and more affordable for people, then we're on our way to a cleaner, better, more affordable way of life. Tesla is on the forefront of making that change through their autonomous technology, through their audiovisual technology, through their electric vehicle technology, through battery technology, through solar energy, everything needed to keep our planet as a whole safe and clean, right? Tesla has a clear path to expanding, right? We want to talk about growth of a company. We want to see consistent growth. We want to see a company that has prospects for growing 5 years from now, 10 years, 20. We want a company that is going to be here long after we are gone, right? The purpose for building generational wealth is not for us. It's for the people who come after us. It's for our kids, our grandkids. It's so they can have the opportunity to do whatever it is that they were put on this earth to do, right? So Tesla has the clear path to expansion, right? They just built 2 new gigafactories this past year, one in Germany, one in Texas. First production is 2021. Let's talk about international expansion real quick. Germany is very important here to think about because where is Daimler AG located? Germany. So think about it. Elon Musk takes over in 2008, takes a loan, $10 million loan from Daimler AG, then takes their arguably top 3 executive, and then 10 years later builds a gigafactory in their own backyard. That's a big flex. That's a big flex, and that shows you that Elon isn't playing, right? That Tesla wants to expand its reach not only in the US, but it's really trying to make clean energy and clean transport affordable and expansive for everyone. They're trying to connect to everyone in the world, right? Finally, their economic moat. We talked a little bit about moats last week, but moats are your competitive advantage, right? What is protecting you and your product from, another competitor coming in and be like, yo, that's my product. I'm going to sell it better. I'm going to rebrand it. I'm going to slap our brand on it and repackage it. What's stopping them from doing it, right? Companies that survive are companies that have not 1 or 2 moats, but multiple moats that protect them from other companies. So Tesla is the leader. Again, they're the pioneer when it comes to the EV space. So that means they have first mover advantage when it comes to intangible assets. So those are the battery storage, the energy storage, the gigafactories in terms of how they make their all electric vehicles, and then production costs. They have the blueprint for how to make that all as cost effective as it can be. Right now, it's still really, really expensive to make, but Tesla, again, first mover advantage, they have the head start. And then when you talk about autonomous technology in general, we're not just talking about autonomous cars, right? Autonomous technology is everywhere now, and they have significant head start over companies like Google, Apple, Microsoft, Facebook, you name it. Other companies, even the U.S. government, even other stocks like Palantir that deal with the U.S. government, or chip stocks like AMD, TSM, NVIDIA, they have a head start on all of those companies when it comes to autonomous technology. Those companies have been around 40, 50, 60 years, besides Palantir, which is brand new. But again, Tesla's been around for 10 years and they already have a head start in so many ways. So 3 reasons why you should consider buying and or holding. Moving to the bear case, all right? Again, this is not telling you to stay away. This is not telling you to sell, but this is telling you that consistent research is needed to really understand how the company moves and what they may do in the future, right? First, we know financially they're overvalued. Any financial metric in terms of looking at the fundamentals of a company, Tesla's been overvalued. They're not very profitable, and when they are, it's not consistent. They haven't really met consistent numbers in terms of their automobile production. Uh, when it comes to PE ratio, so that price to earnings compared to other companies in their industry, it's like a Ford, a Ferrari, a GM, they're significantly overvalued. When it comes to making cars, let's be honest, Tesla's not the best at it, right? But they are the best at innovating towards something that is going to be longer lasting and better for our world, right? I told you I'm an optimist, so I'm going to spin these like no other, right? But they are financially overvalued, and relative to their stock, any misstep, again, they have earnings coming up 427 end of the month. Any misstep, anything that is less than like we are on our way to greatness, can send the stock in a spiral, right? Tesla has to continue to show up and perform in order for us to continue to believe in its growth and justify its high stock value. You know, GM, Ford, they're in the 50s, $50 stocks. Tesla's at $700, right? We need to understand where that's coming from consistently. Leadership has a long history of drama, right? It's like a high school clique, you know, like their early years, they were a long time ago, but Elon is still there. Elon still is very controversial. His tweets are something else. His tweets can really damage the stock. A couple years ago, he got in trouble for his tweet about saying he was going to take the company private, had to pay a huge fine to SEC. And what's overlooked in that is that Elon and the company's decisions have very, very, very large adverse effects on not just the clients and like the company, but also their employees. So back in 2018, they laid off about 7% of their workforce. In 2019, they laid off about 9%, right? So when we're talking about delivering results and we're talking about companies just showing up, Tesla's management team has to do a better job of that consistently. We know they're brilliant, brilliant people, but this is not a game, right? There's still people who work for the company that are relying on Tesla's success in order for them to feed their families and continue to want to work for that company, right? Tesla is consistently struggling to keep talent, right? They do a great job of poaching talent from other companies, but they do struggle with retaining some of their top talent. And Elon said multiple times that finding engineer talent is very, very hard nowadays. So keep that in mind when it comes to investing in a company like Tesla, that their management team needs to be on point. And then finally, Tesla is still pricing out their average consumer. The vehicles that are out now, even though their price point, the Roadster originally came out at 100 grand, right? The Roadster is is probably the equivalent of like their model like Y now, which is at 50 grand. But look at their other models. Like who's buying, you know, a Tesla car that wants one, right? I know a lot of people who want Teslas, but I don't know a lot of people who are driving them, right? But I know a ton of people who are driving the classic cars, the Fords, the GMs. The Ford gets a lot of flat, right? Found on road dead, blah 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 blah. But they're still pumping out the most important car to Americans, right? So understanding that Tesla really is really playing a dangerous game right now, right? They're trying to make things more affordable, but it's really slow and painstaking. And as an investor, you really have to ask yourself, am I willing to wait that out, right? Am I really willing? Because that's their competitive advantage. That's how they're really going to set themselves apart, is if they can make the price worth it, right? People right now, I'm sorry, but if it's not worth it, they don't care, right? It's cheaper to make cars with gasoline and kill our planet and kill, you know, our animals and all this stuff. Not saying I'm like a huge like anybody, but I care about these things. And as someone who is is very in tune with how companies are able to try to make their costs lower. Tesla has to make their costs lower in order for them to succeed. So I want to really just end by talking about ETFs really quickly, exchange traded funds that offer you exposure to Tesla. Tesla's price point right now is $732. If it hadn't split, it'd be $3,800. I don't know about you guys, but especially now, there's not a lot of people who can afford even $700 for one share, right? 76% of Americans are living paycheck to paycheck right now. So not a lot of people have access to investing, even though it's the one thing that could stop them from living paycheck to paycheck. As twisted as it sounds, investing can change your life, and it can buy back your time, right? So if Tesla's too expensive for you right now, look at these 3 ETFs. There are dozens of ETFs that have Tesla, but here are 3 that are fairly popular, but I picked them specifically because that they're a mix between actively managed and passively managed funds, right? So an actively managed ETF is an ETF that is going to have people consistently looking at the stocks within the portfolio, how they're performing, and changing up the portfolio based on performance. So if you have an ETF that has a basket of stocks within, let's say, so let's just take these ETFs, for example, the ARK ETF, which is an innovation fund, all right, part of the ARK family. It's an innovation fund. It has a basket of stocks, right? In that basket of stocks, Tesla makes up 11.66% of that fund. So of all the companies in that stock, they own 11% of their money is in Tesla. What does that mean for you, right? ARK, the price of that fund is about $120 something today. That means if you bought one share of that ARK fund, 11 of your dollars or 12 of your dollars is going towards Tesla. That's just an easy way for you to really look at a fund, right? If you're looking at it from a whole outlook, right? 11 of my dollars are going towards Tesla. I think the next biggest holding in there is Square, and then you have Teladoc. But like looking at the fund, you know that on a day-to-day basis, ARK is either buying or selling to keep that fund growing and producing, right? A passively managed fund like XLY, which is a consumer discretionary sector fund, which again, Tesla's in the consumer discretionary sector, right? It's in the automotive industry, but the overall sector is consumer discretionary. And this is a passively managed fund, meaning they're not buying and selling on a day-to-day basis. They may change up their holdings every quarter, every 6 months, every year, but they're really not buying and selling actively, okay? And then finally, QQQ only has about 4.5% of Tesla in it, right? Which means that it's a pretty crowded field, right? You're gonna have to put more money into it to get more exposure into Tesla as compared to an XLY, right? So again, ETFs are just another way for you to get a piece of the pie, another way for you to reduce your risk, right? We know investing in individual stocks is risky, so we want to reduce it as much as possible, and ETFs allow you to do that. So here are my recommendations for you. After hearing all of that, you can take this advice. This is advice that I would gladly give to you, and you can take it, and I would be happy for you. Everything else, do your own research, but this is important. Educate yourself first, then take action. You don't know what you don't know, and you'll sleep better at night knowing that you're making educated decisions about your money, right? Understand your risk tolerance. Like I said, no one's going to care more about your money than you do, right? So really only invest money that you can afford to lose. Find your risk to reward ratio, stick to it, all right? Have a plan. Investing is all about building wealth over time, right? We're not trying to get rich quick, right? But we're also not trying to like make slow, super slow money. So if something's underperforming, reevaluate it, right? But have a strategy, have a plan. Don't just make decisions based off of hope or FOMO, because those are not strategies, all right? And then finally, start today, right? the best time to start investing was 10 years ago. The next best time was today or tomorrow. Okay. What you're doing is you're buying back your time. The more time you have, the more you can pursue things that really makes your heart beat, right? Making money may make your heart beat, but that's not what you were made to do. That you're a human being. You're supposed to be doing lots of different things, and making money should be the least of our concern. So make investing a priority so you don't have to worry about working forever. Finally, I just want to plug myself a little bit. Here are some of the things that I can support you in. Again, I'm not a financial advisor, but I'm someone who has taken a lot of time in educating myself on financial wellness and financial literacy. So I can offer support and education on a variety of different topics. No topic is too big or too small. We all start somewhere, but it all starts with seeking education and support elsewhere, right? So you can find me if you want some financial literacy help, platform selection, or just want to talk investment strategy, right? There is no right or wrong way to generating wealth, right? But there is a proper way of going about it, right? Doing your research, making a plan, taking action, right? But like I can help you try to find that strategy that works for you, right? No one size fits all, okay? And any questions? That was a lot. Tesla is a beast, y'all. Tesla is one of those one of those stocks that really that if you aren't secure within your own investment strategy, if you're not secure with your own research, can really take you for a ride if you're not understanding not only what they do on the surface, but what they're doing behind the scenes and what they have done to really get a picture of what they are capable of. So again, guys, this was Tesla in a shortened range, but the company itself is ever evolving, and questions on it are always going to keep popping up. So it's a great company to invest in if you're really looking for that challenge, right? But again, this is not financial advice. Any questions? Thank you. Appreciate it. Appreciate it. Yes, Cybertruck. Um, so the Cybertruck is very interesting because it now seems like everybody's trying to make a Cybertruck. I think there's this big controversy with Nikola. If you guys are familiar with the company, early 2020, they were supposed to come out with a Cybertruck, and then it came out later that their demo of the truck happened to be fake, right? Later on, I think GM just revealed like a Cybertruck not so long ago, but Cybertruck it seems like to be kind of like that next level over the hump kind of moment, right? First it was the Roadster, first it was getting a sedan on the road, then it was the crossover with the SUV, and I think the truck is presenting some issues, and I think it's mostly coming down to the design. I think it's just ugly. I think it's very hard to make a truck that is energy efficient that doesn't look like crap, right? So the bigger it gets, the uglier it gets, is my opinion. Honestly, when it comes to trying to really talk about evolution of a vehicle, you don't. It starts to get really clunky and doesn't get really appealing. And I think the appeal of a Ford F-150 is that they look good. You know, they're simple, they're powerful, but they have that kind of that edge that isn't over the top. When you're going electric vehicle, you have to take out a lot of things. You got to substitute a lot of things, and the finished product doesn't look as great. But they are saying because their gigafactories are going to be up in production in Texas and Germany this year, they should be able to start production on that. But one thing else to keep in mind is that they mentioned in their battery day that they aren't really expecting to be full capacity batteries until about 2025, right? So you really got to again think about how much of that Cybertruck and how much of the hype around what Tesla says it's going to do is really priced into the stock right now. Because yeah, of course it's overpriced fundamentally, but if you believe in innovation, if you believe in them enough to see that they've come very far and now they can kind of take that next step, I wouldn't put it past them. You know, a truck seems very easy in the grand scheme of things when it comes to uh, the other goals they have. So yeah, the Cybertruck is going to be six figures for sure, for sure. The GM one that was just unveiled a few months ago, and don't quote me on this, was over 100K too. I think there's another company that is like even look at like a Nissan uh, pickup truck because they are I believe their pickup trucks are all electric. They're ugly and they're also very expensive. So it really comes down to like companies are going to have to really sacrifice themselves and really become more fluid and more chameleon like to keep up with Tesla because Tesla's going to take the risk because it's ingrained in their nature. These other car companies, uh, unfortunately for them, started first, right? So Tesla was able to come in and do something better. And but now it comes down to price. Can they make it affordable? And yes, the ESG component is for me definitely something that is going to be the most important thing. Like now it's the earnings, the profit, it's the how much money are they making. Obviously those are the things are great, but what are companies doing to make the world a better place is what the question is now going to be. And I think you're starting to see a lot more questions being asked of companies, not just from us, the retail investor, but from Congress, from the government, of like an Apple, a Microsoft, a Google, not so much a Tesla right now, but Elon. Elon is the richest man in the world. Elon, what are you doing for the world? Like you have Tesla, sure. You have SpaceX, sure. You have Neuralink, sure. But you have all this money, all this cash. How are you really improving the lives of others, right? Are your tweets really necessary? Is your day-to-day really impacting those who really need it? They say that most of his money is tied up in Tesla, which I believe, which is great because you want the leader to be heavily invested in the company. But we talk about Bezos a lot. Like, what is Bezos doing? But well, what is Elon doing? If Elon didn't have Tesla, like what is he actually doing outside of that? It looks like his plan is to get us off the planet, not to stay and kind of thrive. So in terms of yeah, so I don't want to speculate on his work because a lot of people do donate anonymously and privately. So I don't want to speculate on what he does privately, but I don't know. Elon doesn't come off as someone who would do things privately and not tell you about it, or like you wouldn't find out in some way. Um, just look at how he built the board, how he built the management team. It doesn't feel like Elon does things in silence. It really feels like he gets excited about telling you about what he's going to do and then trying to really exceed your expectations. So I'm sure he does donate, on the side, and he does have his his organizations, his moral tug at the heartstrings, but publicly it doesn't seem like he's really trying to move the needle towards a sustainable way of life for all people other than you know making cars more affordable, more efficient, and then also trying to get us to Mars. No problem. If there's any other questions, feel free to DM me, guys. If you like what you heard, definitely hit me up, send me some feedback. If you want to show me some love on Venmo or Cash App, that'd be great. But again, this is free. This is all just free knowledge. Definitely tell your friends about this. Tell other people you may know who are just who are scared of the market, trying to learn more about the market, or just trying to learn more about investing. Um, let them know that I'll be doing these breakdowns quite frequently. I'll also be kind of doing other things that helps get people more comfortable and more knowledgeable on investing and other things as well. But other than that, hit me up if you want the recording or the PDF. But thank you guys. It's been real, and go Tesla. Peace.